Right, a quick update of where I am in the markets right now. A week ago, or for the past few weeks, it's all been about healthcare, and I've been riding the trend. I'll tell you exactly where those trades stand a little bit further in the video. A quick reminder of how I do this: I use a top-down approach. I look at what sectors are strong. Then I look at what industries within those sectors are also strong. Then, after that, I look at what companies are strong inside those industries. I want to see a company with good fundamentals and good technicals. A strong trend, higher highs, higher lows, supported by volume. I want to know where the crowd is. I want to be where the money's rotating, where the big institutions are moving. So for the last couple of weeks, tech's been struggling. It's everybody's favourite, but it's been going sideways, it's been going up and down. The volatility is crazy. Why? Because many people believe AI is too expensive. They believe that the capex is unjustified, and that, with the rising treasury yields, have made a lot of people nervous. Plenty of people are worried about the debt coming from these companies. But then there's also plenty out there who believe in AI. They welcome that spending from the big hyperscalers because they know that if these companies don't spend now, they're going to get left behind. And no company wants to be left behind. Right now, there's a lot of nervousness, a lot of uncertainty, and money is rotating with every headline. We've got the macro picture: inflation, growth, geopolitical events, oil prices, Iran, Hormuz, and the debt and the nervousness about what's going on in AI. That's what's making such a volatile market right now. Money is flipping daily. Recently, basic materials, financials and healthcare have been the strongest sectors in the market. And I've been riding that trend, and it's paid off. If you want to see full details about what I've been trading, my research, how I'm viewing the market, I publish everything on my Substack. The link's in the description, so if you go down there, like and subscribe, get involved. I've been saying for the last few weeks that NVIDIA would determine where the smart money is going to go next. It's pretty much the last major name to report this earnings season. Every company that's reported this earnings season has pleasantly surprised, or really wasn't as bad as what people are expecting. Yes, the debt's still huge, but companies like Amazon and Microsoft have justified that spend. They've told us that profits from all that AI spend are on their way, and people look like they believe in it. NVIDIA reported on Wednesday after the bell. It beat on guidance and it topped estimates. That alone moved tech, because what made it different this time is it landed in the same 24 hours as beats from CrowdStrike, Salesforce and Okta. All three raised guidance too. These unrelated software names beating and raising on the same night on top of NVIDIA, that's a sector level read, not a stock level one. Yesterday, technology was up 2.7%. Over the month, it's up 12%. Healthcare, the leading sector a week ago, was down slightly yesterday, and now it's barely positive on the week. Its 1 month gain has shrunk by more than a third. So has the rotation started back into tech? Well, we don't know yet, but we're watching, we're monitoring those stocks that we've already got on our watch list. Again, want to see more of what I'm watching? Head down to that Substack. Follow, like, and get involved. So inside tech, I'm looking a little bit deeper. Today's gains, there wasn't unified tech strength. Software infrastructure and software application, the sub-industries, are the ones that are trending right now. Software infrastructure is up 26% on the month, and software application is up nearly 14%. Now, I think it's a little bit too early to get excited about these industries and these sectors, but we can watch and we can prepare. I've got two names on right now, and I've closed two. NVIDIA, I got in on the earnings release. I got in just before the earnings call at $208. I've took some profits along the way because it's common for a stock to pull back slightly after earnings, even a good one. So that's what I've done. I've banked something. I've took something off the table to pay the bills. Now I'm watching for a fresh entry. I've also got Hinge Health, ticker HNG. I'm holding that from $90. Again, the details are on the Substack. I believe the run in healthcare could be coming to an end. I believe money could be rotating back into tech. So I've stopped opening new positions. I'm holding Hinge, but I've closed McKesson and Eli Lilly. Both, again, made really good gains the past few weeks. Because, again, that's where the strength was. I'm not getting too excited. It's easy to get excited, especially when it comes to AI and tech, because we know the gains that these companies can give. But we need the trend to develop. We need those confirmation volume bars. We need those higher highs and higher lows. I'm going to start putting out videos a couple of times a week to tell you what trades I'm involved in the markets. Unlike other people on social media, I do not have a batting average of like 99%. Some trades work, some don't. But I hold the winners longer than the losers, and that enables me to make a profit, to live the life that I want to live. Now, it's a very lonely game, and I want to build a community of people who want to trade in an honest and transparent way and share what they're looking at. So if you want to get involved, hit that like, hit that subscribe, and I'll see you on the next one.